This has been fascinating because I'm just the guy who's been like had his nose to the ETF grindstone for almost 20 years. And I've seen launch after launch. In fact, they come out so fast you miss them. There's been since in the past 6 weeks, there's been like 120 ETF launches. We've only talked about 10 of them, but there's been 120, right? And most of them do nothing. I mean, they're like crickets. They're lucky to get $1 million in trading. So here come these. They trade 50 to 500 times the norm. Not percent increase, but times.
Eric Balchunas is a senior Bloomberg ETF analyst with 20 years of experience studying exchange-traded funds. Last year, Eric and James Seifert, another Bloomberg ETF analyst, closely followed the 14-spot Bitcoin ETF applications submitted to the U.S. Securities and Exchange Commission. They gave us credible updates on the applications and correctly timed everything, including the final date of the SEC's approvals. But the approvals are just one part of the job. Since the ETFs started trading, Eric has continued giving insightful updates about the ETFs, especially as more Bitcoin investors have questioned whether the venture succeeded due to recent price declines. For everyone questioning the ETF hype because of the price declines and the sell-off, Eric's reaction is one of complete befuddlement. According to the senior ETF analyst, not only has this been a successful venture, but it's also been a particularly historic moment for the entire ETF sector. To put things into perspective, the ProShares Bitcoin Strategy Fund, BITO, surpassed $1 billion in volume on its second day of trading. The SPDR Gold Shares, GLD, achieved this milestone in 3 days. BlackRock's iShares ETF and Fidelity's FBTC hit $1 billion in assets in 4 and 5 days, respectively. It should be noted that the iShares ETF and the FBTC launched on the same day with 9 other spot Bitcoin ETFs. During a recent interview, Eric explained that the massive outflows from GBTC caused the price declines. Before it started trading as a spot Bitcoin ETF on January 11th, investors in the GBTC fund could not redeem their shares for Bitcoin or a cash equivalent. Since the conversion, authorized participants have been allowed to buy up shares from investors and redeem them for the cash equivalent of the Bitcoin these shares represent. When that happens, GBTC must sell off Bitcoin to pay the recipients. In one of his posts on X, Eric compares GBTC's performance to the 9 other ETFs, which he has titled The Newborn 9. The post reads, "Latest, Day 5 is in books total rolling net flows at $1.2 billion, down a bit after GBTC's Whooper, minus $582 million, edged out the 9's plus $447 million. GBTC's Bloodbath up to minus $2.2 billion versus the 9's $3.3 billion with $6.6 billion in volume." The Bloomberg analyst provides some important context and insightful analysis in a recent interview with Empire. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks and enjoy.
I realized that there's 2 groups that are mainly crapping on it. It's the econ twit and just general people who hate Bitcoin. They like to troll the crypto bros. So this is a great way to say, man, these are underwhelming. It sort of signals to the rest of econ they're cool, and it basically trolls the crypto bros to going crazy because, oh my God, what did you mean it wasn't successful? So I get why they would do that. That's their motivation. The When Moon crowd, they were like thinking, oh my God, we're going to get this like huge God candle or whatever, the God candle. And it kind of flattened. It went down a little bit. There was a sell the news kind of event. And they're all like trying to investigate, wait a second, the GBCC outflows kind of match the inflows to the ETF. The other ones, there's no new net buying, and you're playing Sherlock Holmes. And they're frustrated because they wanted that bump. 2 things on that. A, it went up 80% on the rumor or optimism of approval. You have to factor that into all this. If you go from approval day on and you're like, what have you done for me lately? You have a major perspective problem. You need to get outside, touch grass, read a book, get in a relationship, find something else to do. I'm a 60-40 investor. I'm happy with 7% a year. So the idea that you could still be at 50% or something year to date and be bitching and moaning is insane to me. So there's that kind of perspective. Now, every time there's a run up, like when the Fed is supposed to lower rates, There's a run up in the stock market before the Fed announcement. Like, this is what happens in markets. There's a run up before an expected outcome. So there's a seldom news event. Second, there's been a lot more buying in flows than there has been GBTC outflows. But the numbers and the volume is so dramatically off the charts and abnormal. I'm not really sure what planet people are from that it's not enough, or they didn't think they thought it would be bigger. Certainly there was a lot of hype, and maybe it just underwhelmed compared to that, but that's a relative issue that I can't help them with. I can only go with reality and the past, the numbers. And this was like top 0.1% ETF launch ever.
Can you put some numbers around that, Eric?
Sure. So if you we'll go by flows, right? So the newborn 9, and again, I separate out the newborn 9 because GBTC coming over and is a fully grown adult. GBTC is a separate entity. The newborn 9, which again, these are all first ever, have taken in $3 billion. They've traded about $6 billion. Those are crazy numbers. So the volume alone, that's 6 billion. That's like multitudes more than all 500 ETFs launched last year traded combined. Like, pick a day this week. They trade about, maybe close to $1 billion, the 500 of them together. And these guys have done 6 billion of that. They're averaging more than the 500 combined, basically. So it's hard to do this in the first couple of days. And the other thing I'll mention, which I'm about to tweet out, and Matt is going to get a kick out of this. This is amazing to me. The volume usually on these big hyped up launches, it starts high and it comes down like 25% a day. And then you hope it settles into like 70 million a day or something like that. You'd be happy with that. It went up today. So today, all of them are trading more than they did the day before. That is a really good sign. You never see that. That tells you there's legs here. It's not just like some hype thing that like fizzled away.
In another ETF update posted on Friday, Eric noted that the newborn 9 are putting up a good fight despite the massive GBTC outflows. The post reads, "The 9 saw another jump in volume today, up 12% versus Thursday and 53% from Wednesday, a rare phenomenon. Also, check out FBTC seeing more trading than BlackRock's iShares. Those two are in a legit duel to be the one. But all of them are posting huge numbers for newbies. Competition is making them all hustle twice as hard." In a follow-up tweet, Eric added, "For context, as a group, the 9's $1.2 billion in daily volume puts them in the top 1% of all ETFs with GBTC as well. But even if you single them out, FBTC and iShares are each in the top 2%. Keep in mind the average age of ETFs in the top 2% is probably like 14 years old, so pretty wild to get there in a week." Let's get back to the interview as Eric speaks further about outflows and inflows and how these generally compare with other ETFs.
We used to show this chart because Matt knows this. There's people who are like, ETFs are the tail wagging the dog, and like stock picking is over because all the stocks are in ETF. The flows in the ETF will make dispersion among stocks go away. Long story short, some of the ways we dispelled that was showing like GE stock over the course of a year when like bad earnings came out, it like tanked. And then we showed the flows of ETFs that held it and index funds. And the flows could not do anything to stop the tanking. They were inflows coming in to buy GE. Now, would GE have gone down a little further? Probably. So I would argue in this kind of a scenario, if you have sell the news people, who are players who were hedge funds who bought GBTC, maybe wrote it up and they're selling, any kind of sell the news or GBTC selling, the flows into the newborns at least are making it less bad, right? So this happens, right? It would be way worse if it weren't for the ETF flows that are net positive at about $1 billion. So it's like somebody else is doing it. I put that meme of like the call. We've traced the call. It's coming from inside the house because I was like talking to the crypto people. This is on you, buddy. Somebody in your world, I don't know who it is, some whale or just a bunch of degenerates, they're selling the news here. That's overwhelming the ETF inflows. So just like GE could fall despite ETF inflows and disprove the tail wagging the dog, these ETFs are not going to wag the dog either. There are many other elements going on. Over time, they should help. I would think. But one other point to make: the other whole thing, GBTC outflows, newborn 9 inflows. So even though the newborn 9 have taken in more than GBTC outflows, there definitely is some kind of an offsetting. And I don't know how many people are like refugees from GBTC who have found a home in one of the newborn nine. Let's call that 30% of the outflows. I don't think it's there. I think a lot of hedge funds, game that discount and they're going somewhere else. They don't use ETFs a ton anyway. That said, ETFs are going to steal from everywhere. Like when ETF, like VU is the Vanguard 500, right? We track its flows. It's taken in $35 billion or $40 billion last year. Probably some of that came from mutual funds. And those outflows from mutual funds and the inflows to VU, they are net zero demand on stocks. But we still track VU inflows. If we tried to offset every flow that ETF stole, we'd go nuts. It's just they steal from everywhere, and that they will. There'll probably be flows coming out of the Canadian ETFs. There'll probably be flows coming out of Coinbase. There'll probably be flows definitely from GBTC. Anything that's high cost is going to get some of its lunch stolen by the ETFs over time. But GBTC is like a great example. To me, it's playing the role of the high cost mutual fund in this little universe.
As of press time, Bitcoin is trading at $41,558 per coin, a 2.71% decline in the past 24 hours, and a 15% decline from January 11th's $49,000 peak. However, we are still up by over 82%, year over year. In addition, many expert analysts have opined that we will soon be back on track in a few days after the GBTC gouge ends. Earlier this week, anonymous Bitcoin analyst Plan B stated on X that Bitcoin is still on track despite the ETF Sell the News event. In an earlier post, the pseudonymous analyst gave his updated Bitcoin price prediction. The post reads, "I expect 55K Bitcoin at halving, 100K in 2024, and 532K in 2025. What are your thoughts on Eric's analysis and Plan B's predictions for Bitcoin? Please drop your comments and observations in the comments section below. Also, ensure you subscribe to the channel, turn on post notifications, and check out our other videos.